Everybody wants to trade momentum stocks. Well, there's a good reason for it. They're moving fast. They're volatile. They got a lot of action. You don't have to wait for things to happen. That's why you got into this business, right? That's why you want to be a swing trader and an active trader. But not all momentum stocks move up. Some move down. Remember, volatility works both ways. Whenever there's an opportunity for big and fast profits, there's an opportunity for big, fast losers. So how do you tell if a momentum stock is the real deal, if it's going to move forward, or if it's fool's gold? That's what we're going to talk about in today's video. Before we dive in, don't forget, this is your last chance to sign up for tomorrow's 10X Challenge briefing and live trading. Click the button below to save your seat now. This could be the most important class I've ever held. It's your chance to dramatically build your wealth, not only this year, but for many years to come. A roadmap for your financial future. And it's not just your roadmap, it's my personal roadmap too. And the one I've given to my parents for their future. If you want it, then use the sign up link below this video now. Don't procrastinate, do it now. Everybody wants to buy momentum stocks, but the question is it a real momentum stock? Does it have the power to continue going higher? Does it have more momentum? Or is this the high? And that's the million-dollar question, and that's what everybody wants to know. And there's a good reason for it, because let me break it down for you. Momentum stocks don't have a high winning rate. In other words, their percentage of profitability is typically below 50th percentile. Yes, below 50th percentile. In other words, you can bet ahead, you can roll a head or a tail and you won't know if it's going to be a winner or a loser. The key that makes momentum stocks so attractive is they're already moving, so you don't have to wait for the gains to occur. They're moving, they're in motion, okay? So the upside is they're in motion, the downside is there's a high loss rate. How do you fix the high lose rate or the high loss rate and increase it so that you get both a high win rate and you get to enjoy the momentum in the momentum stocks? Well, there's two ways of doing it. Number one, your performance. Measure the performance of the stock. If you're seeing a stock and it's just moving 1 month fast, it doesn't mean anything. Look back 3 months, look back 6 months. What I typically look at is I look at performance figures over 6 months, 3 months, and 1 month. And I want to see that stock outperform other stocks based on a 6-month time period, 6 months, 3 months, and 1 month. And I know what you're thinking. You're probably thinking to yourself, Roger, I'm a swing trader. I hold stocks for 2 weeks or a week or 10 days. What the hell do I care if it's been trending 6 months ago? What's the difference? Why does it matter? It matters. You know why? Because this gives you the foundational strength of the stock. So even if the stock moves a little lower, the fact that it's been accumulated for 6 months straight and it's still outperforming all stocks on a 6-month basis is an important factor for institutional traders. Institutional traders focus on the 6-month, 3-month, and the 1-month back performance. And if they see that the stock doesn't perform others, they won't accumulate it as aggressively. And if they don't accumulate the stocks as aggressively, guess what's going to happen to the momentum? It's going to fizzle out. Very important. Check the momentum, not just on how it's been doing the last 2 weeks or the last 2 days. Check the momentum based on how it's been doing 6 months ago, 3 months ago, a month ago, and finally how it's doing now. That's number one. Second factor, volatility. Most of you think higher volatility means more momentum. No, the opposite is true. Higher volatility means more risk. There's more profit potential, but whenever you have more profit potential, you have more risk. It's a double-edged sword. More volatility, higher profit, higher risk. You can't have it both ways, okay? So higher volatility typically means the stock or whatever asset you're trading is getting tired. Higher volatility usually occurs before a trend exhausts itself. So if you see volatility like this every day, going higher every day, that's not always a good thing. Always watch for periods of volatility followed by congestion and try to buy a momentum stock during a congestion period when it's going sideways, when it just finished moving up, goes up and then moves sideways. That's when you want to buy it. Whenever the stock is congesting, volatility is lower. Whenever volatility is lower, there's less risk on the trade. Less risk. So you want momentum stocks and you want less risk. Momentum stocks are great when they're profitable. But again, you got to increase your win rate. You do that by checking performance over 6 months, 3 months, and 1 month. And you watch volatility. You watch for volatility to decline before entering. That'll lower your risk automatically. I got a lot more tips for you, but for today, that's it. Have you registered for tomorrow's free 10x challenge briefing and live trading? Take a moment and do it now. If you don't attend this event, then you'd better have a beyond incredible financial plan for the next 3 years and beyond. If you don't, then do yourself and your family a favor. Click the button below to register now.